Good morning. It's Jeffrey, Christian of CPM Group. It's about 11:20 in the morning here on Friday in New York on Friday, the 2nd of August. I want to talk about the sources of silver. And, we've seen recently some discussion and a spurt of commentary about how free marketing documents that provide some silver supply demand balances and analyses are worth every penny that you pay for them. That the data doesn't necessarily hold together or accurately represent the market or be even internally consistent. And we have seen some pretty egregious errors in recent years, but I'll be honest with you, we've seen egregious errors since, say, in gold, we started seeing them in 1989, 1990. There was a change in one of our competitor at the time, or the other company that produced gold data. And in silver, we saw this change and the deterioration of the silver data starting around 1994, 1995. So it's been a problem for a long time. People use this data because it's free, and it's wrong. It's inaccurate. It's qualitatively and quantitatively inaccurate. But that's beside the point. We've seen in recent weeks people in the silver market starting to question some of these issues. So we're going to talk about that. And I say here, and you can see a link, we've written and talked about this actually throughout, since the early 1990s. And you can get a 2003 article that talks about some of the errors from our website. And people who are surprised to find out that CPM Group exists, they can go to that website and they can educate themselves. They can also buy our reports. Before I get into this issue, and at the end of this presentation, I will talk about our market outlook, and I want to talk about the next two videos that we would plan to do next week if the markets allow us to focus on the topics that we want to focus on. But I will talk about our market outlook toward the end of this. I will say that today, prices of silver and gold shot up. Gold reached a new record for the December contract. It was $2,522.50. It has since fallen back below 2,500, and it's trading around 2,475 right now. Silver shot up. It got up to 29.36. And right now it's down to 28. Is that possible? Yes, 28.26. So big range there. Volatile markets. We'll talk about that a little bit later in this presentation. And let's get into the sources of silver. Today's presentation will cover both the newly refined silver. That includes silver refined from long-held silver, jewelry and silverware and decorative objects and religious objects. And we'll talk about above-ground refined inventories of silver, and we'll also talk about in-the-ground reserves and resources of silver. Now, in terms of decorative objects analysis, people have asked, this is a statue I have of the Hindu god Ganesh, and it is exactly 10 ounces of sterling silver. And I've mentioned it in past videos, and people say, I'd love to see that. There's several things to think about this thing, and this is the stuff that gets melted down. And it's very funny because, first off, you'll note it's exactly 10 ounces. It comes from India. But it's not in grams or kilograms or anything like that. It's exactly 10 ounces. So you know exactly what the value is because it's 10 ounces of sterling silver. The other thing is that you saw a few years ago when we had a very weak market in India for silver at the time, there were people who were saying that it was sacrilegious to melt down statues of gods and religious objects to recover the silver. People did it anyway. But it's very important to understand that the flow, and I'm going to be repetitive here because you need to be, the difference between the current account or the flow of supply of newly refined metal and the existence of capital stock, if you will, the above ground metal. Now, there is this growing awareness of the value and the cost of free data that you get from marketeers. CPM Group has been the source of accurate silver data and analysis since the 1970s. And I've shown you this. This is a progression, the silver report in the top center. That was the J. Aaron Silver Report around 1971 or 72. These reports became these blue-covered reports, and I actually referred to this one today in my presentation. It's from December of 1980. That was J. Aaron. We became part of Goldman Sachs in 1981. We spun out and set up CPM Group as an independent research company in 1986, and we've been independent ever since then. We've produced silver surveys. Initially, they were quarterly from 1986-87 when we started. In 2001, after 9/11, we got rid of the quarterly system and we just started doing annual updates. Initially, they were called silver surveys. When John Wiley wanted to publish them for us, we changed the name to Silver Yearbooks to coincide with they were publishing at the time as the CRB Commodities Yearbook. And they would continue to do it. And then you can see on the lower right-hand side, our silver yearbooks are translated into Chinese and distributed throughout China. We have been the source for accurate silver data and analysis since the 1970s. And we're not marketeers. People don't pay us to be bullish. They pay us to be right. And unfortunately for bulls, we've been right. And yes, we did create the World Silver Survey. We had that Silver Survey quarterly report starting in 1986-87, and the Silver Institute hired us in an initial 5-year agreement to produce a stripped-down version called the World Silver Survey that they could distribute freely. We did that for 5 years, and we said we did not want to continue to do it. Our reputation was suffering because we were producing reports that were being given away free by marketing groups that were there, and people were saying that we were being more bullish on silver than we would otherwise have been. We were not. We had an agreement with them that said we had total editorial control over the market, and quite frankly, certain members of the Silver Institute were really upset from 1990 through 1994 with the fact that CPM Group's World Silver Surveys were not as bullish as they would have liked them to be. But if you go back to that period of time, the silver price was trading between $3.50 and $5.50 an ounce, and we called it like it was. And we always call it like it was. You can see right here, this is that period when we were doing the silver yearbook, and the silver price basically was flat to lower during that period of time. And we had a sell signal on our intermediate term investor recommendations starting in 1990, right? And I guess some people, like I said, some members of the Silver Institute board didn't like the fact that they were putting out data that was perhaps less bullish than they would have liked. But we try to be right. People pay us to be right, and we have been right. And you can see from the 1980 through 2001, we were back and forth buy, sell, buy, sell. 2001, we said buy. The price started rising in 2005, 2006. In April of 2011, we said sell. And then around 2019, 2020, we said buy. And that is our price projections on intermediate, 2 to 3 year outlook. And it's based on our supply-demand research. The fact that we've done pretty well in calling the market suggests that our research is pretty good. It could be coincidental that our data we've called the price, but it's probably not. And I'll stand in comparison with any of the guys who have been saying that silver is going to $50 and staying there, or $500 or $1,000 and staying there for all of their careers. I'll compare my track record to theirs any day of the week. Sources of silver supply. Again, as I was said, you have to understand this stuff. Now, all of the charts I'm about to show you are in our 2024 Silver Yearbook. It costs $160. You can go to our website and download it. All of this information and the analysis behind it is in there. Anyone who actually wants to know what is accurate about silver supply, fabrication demand, investment demand, inventories, market trends, prices, the relationship in silver prices to macroeconomic trends like inflation and the dollar, it's all in there. Some people's eyes would really be opened, if they want their eyes to be opened, by buying and reading and studying that report. The inventories chapter alone is 38 pages long. Again, when you're looking at the sources of silver supply and you say, well, what's the potential silver supply responses to higher prices or shortages? You have how much silver might come into the market from investor selling and secondary supply in short order, and in mine production from the longer run. You have to understand there is a current flow, we measure it annually, of silver supply from mine production and secondary recovery of old scrap. And then there are stocks or capital stocks, the silver inventories in a refined form of bars and coins and medallions above ground, and mineable reserves and resources. Now, of the inventories, and I'll show you a chart in a second, silver at rest does not affect the silver price. It only has a psychological impact on people who know how much is out there and say, gee, I'm not going to invest in silver based on all of this garbage I hear that we're running out of silver and there's only that Mexico won't have mineable silver after 2028 and all this other nonsense. There's a psychological impact of people who say, okay, well, maybe I won't be quite so bullish on silver. There are a lot of people, including many CPM Group clients, who are long silver, knowing that that's all nonsense, but knowing that there are other good reasons to own silver. Silver inventories at rest affect silver mostly when those inventories are in motion, when investors are buying silver and adding it to their inventories or selling it. And you'll notice I just said when investors are buying silver and adding to their inventories. Because one of the things that a lot of people don't understand is who owns those inventories. And they say, well, there's no data. That's right, because people who invest in gold and silver don't have any legal obligation to tell anyone what they've got. And they don't want to. One of the values of gold and silver for investors is the anonymity that they bring to your wealth. Again, current account, newly refined silver flowing into the market, either from mine production or old scrap, and then this capital stock, if you want to think about it that way, which exists in refined form. These are known as inventories in commodity markets as opposed to capital stock in financial markets. And some may be considered in the form of easily identifiable and refinable silver in the form of jewelry, silverware, religious objects. We don't include that when we talk about above ground refined silver inventories. We talk about silver that is in silver form, not my Ganesha, silver in refined form, bars, coins, medallions. Those are the inventories that we pay attention to. We pay attention to the other stuff because it can come into the market, and I'll show you how it does. So again, current supply, flow of new materials from stocks, and then from future supplies, reserves and resources of mineable silver in the ground that are known. There are resources that are estimated that are much, much, much larger. And in our book, our Silver Yearbook, we talk about how those resources and reserves have grown over the last 40 years. In the early 1970s, the Club of Rome and other people were talking about how we'd run out of silver and gold and oil and copper by 1980, 1990. Didn't happen because they were looking at reserves of these commodities and not resources. Oil, we were using, I think, 30 billion barrels a day of oil. And they were saying, oh, we're going to run out of oil by 1980. Today we have, we're using around 100 million barrels a day. And we have more oil reserves in the ground around the world than we did before. Now, in 1970, oil was like $1.50 or $1.25 a barrel. Today, it's $82 a barrel. And at $82 a barrel, there's a lot of oil that was in resources that was known to exist underground, but was not profitable to extract at $1.25. But at $82 it is. Anyway, 60 billion ounces of silver have been mined through history, most of it since about the 1850s, 1840s. Of that, about 5.5 billion exists in above ground refined inventories. Another 27 billion are estimated to exist in jewelry and decorative objects and religious objects and silverware. And about 29 billion ounces are lost to history, used in things like solders and ball bearings and mirrors that don't get recycled or didn't get recycled. 60 billion ounces of metal that's out there. 5.5 in refined form, 27 billion in product form. Current supply-demand balance is tight. The amount of silver being refined from mine production and secondary supply is relatively low. Most of it is relative to fabrication demand. The right way to look at this is total supply less fabrication demand. You don't throw dummy variables for investment demand in there and then you say, oh my God, there's a deficit. You look at total supply less fabrication demand and you've got a surplus, and you've had a surplus since 2005, 2006, and it's dwindling. It's getting tighter, but it's still a surplus. There are no yawning deficits that you have to explain how they get. If you throw in investment demand and then you say, oh, I've got a deficit, but that deficit is being met by refined inventories above ground that are being sold back into the market. Well, who owns those refined inventories? It's investors. So if investors are buying all this silver that causes this deficit in your made-up data, but they're actually selling to compensate for that data, their net investment demand is not that big. That's how markets work, even the silver market. Excuse me. Total newly refined silver supply has been flat for a decade. That's mine production and secondary supply. You can see it has grown sharply since 1980. Silver reserves and the reserve base has risen sharply since the 1980s. Reserves were around 8 billion ounces, 9 billion ounces back then. They are now something on the order of 18 billion ounces. These are reserves that are economically mineable at current or near current prices that are in the ground. They're not reserves of refined metal above ground, in the ground. There has been a constant flow of old scrap from jewelry and decorative objects. I want to focus on 1980. You can see that 1978 is of 150 million ounces of silver was refined from scrap. Shot up to over 200 billion ounces as the silver price started rising over the course of 1979 from $5 to $50 in January of 1980. You had refiners that were able to refine and return your metal in 1 or 2 weeks at the beginning of 1979 that were needing 5 or 6 months to process everything that was being sold to them by the end of 1979. In 1980, 300 million ounces of silver was refined, estimated by CPM Group, refined from old scrap. Mine production that year was 268 million ounces, so you actually had more silver coming in from scrap, jewelry, and decorative items because the price had gotten to $50 than you had being mined. In the gold market at the time, people were saying, oh, we have negative jewelry demand in 1980. People are selling more old jewelry for the gold content than are buying new jewelry, gold contained in jewelry. Now, 300 million ounces is not a lot of metal. It is a lot of metal in terms of the supply. It more than doubled the supply if you look at it, relative to mine production. But it's not a lot in terms of that 26 billion ounces of silver that is out there in jewelry and decorative forms. It's about 1.2%. So most of those people aren't going to sell their jewelry and their statues because the price rises. But maybe 1% of that stuff comes in. It's not a lot, but in terms of new supply of newly refined silver, it is a lot. And you have to pay attention to that. These are the above ground inventories of silver, and we break them down. Coinage is the green stuff at the top. Governments are a little blue thing at the bottom. Exchanges are the maroon. You can see that they're a relatively small part. Most of the stuff is in coin form and implied unreported inventories. Most of that metal that's in unreported inventories is owned by investors. Some of it is owned by bullion banks and dealers who lease it out to miners, smelters, refiners, and fabricators, and wholesalers and retailers. But the bulk of that unreported silver bullion, maybe half of it, is owned by investors. And all of those coins are basically owned by investors. So investors are the above ground refined end. Now, this is the term we use. You'll hear people talk about available inventories, and then the silver bugs will say, oh, but it's not really available because I'm not going to sell mine. We don't use that term except when we're making fun of people who use that term. Sorry, but that's the way it is. We talk about above ground refined silver inventories. And as I said, our report has 38 pages talking about inventories and explaining it for people. COMEX London Shanghai inventories are a small portion. You saw that little maroon line. COMEX inventories are inventories that are reported inventories that are in COMEX registered depositories. There are and they are within a certain distance from New York City. Back when I started in business, they had to be in Manhattan. Then they had to be in New York City. Then they had to be within a certain distance of New York City. And they've expanded that distance. There are other depositories within that COMEX capture area that simply are not registered. And there are depositories all over the country, Los Angeles, Las Vegas, Idaho, Salt Lake City. There are depositories all over the country holding silver that don't show up in there. And even within the COMEX inventories, it's only 1,000-ounce bars that meet COMEX specs that get reported. So if you have 100-ounce bars in the same depository, they don't show up in the COMEX reported data. Similarly, in London, you have London inventories, they started reporting in 2016, but they don't include non-LBMA registered depositories, and they don't include depositories elsewhere in the UK that are outside of the LBMA capture area, which is basically Greater London. Cumulative silver coinage has been almost 2.5 billion ounces since 1985. I was proud to be part of the team that created the Silver Eagle. I was part of the team that advised the Royal Canadian Mint on the Silver Maple Leaf. I was part of the team that advised the Perth Mint on its gold, silver, and platinum coins, as well as the Austrian Mint back then. I was glad to be part of a group that made silver bullion coins more readily available to investors. 2.4 billion ounces since 1985. Now, where did it go? Do you think it disappeared? No, it's there, almost all in coin form still, available to be sold if investors that own that decide they want to sell it, either because the price has risen so high or they've died and their heirs sell it, or the price has fallen so high, low that they just got disgusted and they sold the stuff out, or maybe they needed the money. I had an uncle who bought a house in 1980, the first quarter of 1980, using silver. The buyer, watched the price go from $5 to $50. Said, "Yeah, I'll sell you my house at $35 an ounce of silver." My uncle had paid roughly $1.29 for it. Governments don't own much silver anymore. It's about 50 million ounces. Some working inventories for coins, although not that as much as you might think. And some military applications. Military applications are not hundreds of millions of ounces. It's probably 50 million ounces or less a year, and a lot of that stuff gets recycled. U.S. Treasury used to have 3.3 billion ounces of silver in the early 1940s. Now, we showed this chart, and we'd explained it all in a January 16th YouTube video, above ground silver inventories. So I won't bore you with that, and I won't bore you with the fact that the Manhattan Project used silver because it couldn't get the copper during the war that it really wanted for its Manhattan Project. Let's turn to the market. That's what I've got on that. Gold touched a record price today. 2 weeks ago, we issued our trade recommendation and we said, look, we think the price of silver, the price of gold could trade between 2,300 and 2,500 over the next couple of weeks. I'm sorry, that was last week that we said that. It got to 25, 22 today. So it's hit the top of that market. Wouldn't be surprised to see it come off. It rose because of the employment report, or rather the unemployment report, 4.3% unemployment. You're starting to see the slowdown in the economy that we've been talking about for a year and a half, 2 years. Yeah. So that suggests to some people lower interest rates, ergo higher gold prices. The price has surged to 2,522, and now it's come back down to about 2,475, which is still record levels, right? We wouldn't be surprised to see 2,300. Definitely not surprised to see 2,400 because that was like 3 days ago. Wouldn't be surprised to see the price come back down to 2,300, if not in the next couple of weeks, maybe over the course of August into early September. Longer term, we still think the price is going to rise. Now, July is an active COMEX month. Going into the first, or August is a active COMEX gold delivery month. Going into the delivery period 3 days ago, we had almost 30 million ounces of open interest in the August contract. Almost all of it, 28 million, 29 million ounces of it was rolled into December. The December open interest today is about 39.5 million ounces. I think that the COMEX open interest for the August contract is about 1 million ounces, a little over 1.1 million ounces. We had 1.6 million ounces of COMEX gold futures contracts for August delivery actually delivered in the first 3 days of the year, of the month. So of that 30 million ounces, about 1.6 was taken delivery of. It's still in the vaults. In fact, the vault, the volume of gold held in COMEX depositories has risen. So there's been a change of ownership of that gold, but it's still there. And most of the August open interest was rolled into December because people were looking at the economic outlook. A little bit scarier today than it was yesterday. And they're looking at the political environment. which has just been scary for a long, long time. Silver, similar situation, but much more bearishness there. The price of silver did rise over the course of earlier this year. It's come off. I'm sorry, I don't have the current chart here. I grabbed the wrong chart in my haste. But we have been testing $29 and $30. Our expectation is that we wouldn't be surprised to see the prices come off for silver over the course of August. But then we think in the final 4 months, the silver price strengthens. One last chart. If the market gods permit, on Tuesday, we want to talk about we have gone through our quarterly revisions, looking at the global economy and gold and silver markets with 10-year projections. For 10-year projections for the economy, 10-year projections for gold, silver, and supply, demand, and price under 3 different scenarios. And given what we've seen in the first half of this year, we're perhaps less pessimistic, but still pessimistic on the economy. And we're still expecting higher gold and silver prices. And we are expecting higher gold and silver prices over the next 10 years than we had been, simply because where we are today in the prices are higher than, at least with gold, higher than we thought that they would be. So that suggests to us that it's going to go. On Friday, I want to do a video on what central banks are not buying gold and which ones are buying gold. Because I've been picking up issues, people saying, oh, well, all these, China's secretly buying gold for its central banks. And all these other countries are buying gold, but it's all just wishful thinking on the part of gold bugs. And they twist and they turn and they stay up at night trying to figure out how it is that they could be wrong. They can't be wrong. So if they're wrong, if the price isn't $10,000 an ounce, there must be something that they're not seeing, and it comes out there. I've gone on way too long. Sorry about that. A lot of good information here. You can go to our website, cpmgroup.com. You can buy the Silver Yearbook and read it. You can buy our Gold and Platinum Yearbooks. You can buy other research. And you can send us an email. There are a lot of free reads and videos there. And you can send us an email at info@cpmgroup.com and say, CPM Group, let's talk about how you can help us. I'll talk to you next week. In the meantime, be good to yourself. Be good to those around you. Try to do something good for the world. And we'll see where we go.